Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the day's trade. Well, the markets are buoyant at this point in time, led by the moves in the pharma index. Clearly, some of the auto major that are gaining in trade today. And of course, apart from that, the IT stocks are back in flavor right ahead of the Q4 earnings season, which is to kickstart from today with Bellwether IT firm TCS to be reporting its numbers later in the day. Also, of course, the markets are awaiting the inflation and the IIP figures as well. Right ahead of that, supportive global cues that are leading to this rally in the markets continuing for the 8th consecutive session as we speak. Now look at the Sensex right now, 60,274. That's the level at which the Sensex trading at. 117 points up in trade, about 50 points of a move on the upside for the Nifty as well. It's 17,770. That's the level for the Nifty right now. Both of these indices are up by 0.2% higher in trade. Of course, the broader markets also supporting in tow with the kind of movement that we are seeing on both the mid cap and the small cap 100 indices as well. In terms of the kind of move that we are seeing on the small cap 100 index, that's the one that's moving in closer to its day's high level. I mean, you can see a 0.6% of an uptick for that one, although slightly off that top point of the day. The mid cap 100 index also about 0.5% higher in trade. The stocks that are moving in trade today in terms of the top Nifty 50 gainers include the likes of Divis Laboratories, that's sharply up by 7.5% today. Bajaj Auto is back in flavor, 2% higher. Adani stocks are also moving up. Adani Enterprises up by 2%. 1839, that's the level at which the Adani Enterprises stock is trading at. Dr. Reddy's again from the pharma pack, that's moved up higher today, and Asian Paints, that's also improving in trade. On the downside, you do have some of the FMCG majors like Nestle not really contributing, oil and gas majors like ONGC, Power Major, NTPC, IndusInd Bank and Power Grid also. In fact, these are the laggards in today's trading session. But time now to welcome our guest on the show. Mr. Avinnash Gorakshakar joins in. He's the Director of Research at ProfitMart Securities. Welcome, Avinnash, and thank you so much for taking the time out for this discussion. Well, we've been up for 7 straight sessions until yesterday. Today is the 8th consecutive day when the markets are looking buoyant. Are you looking at the markets in a constructive fashion as of now, or do you still see a chance of the rally really getting derailed with the kind of macro data that we are awaiting and the earnings, season numbers that we are awaiting as well?
Yeah, I think, Sakshi, first of all, I think, this last 7, 8 days upside which we are seeing in the markets is also largely driven by the fact that, liquidity from the FIs has again turned positive. So I think to a large extent, the markets have been, given the FI kind of buying support. And most of the, negatives which were there earlier are now more or less factored into the current prices and valuations. So I don't see any major kind of negative surprise coming in as of now. But yes, I think now the quarterly earnings season is going to be out. So I think again the focus is going to be on companies where we would be hearing commentary from the managements, the quarterly numbers, and what kind of outlook the management would share. So I think it's going to be more stock specific now. The index could range in a very small range, and we may not see a very major rise for the index. Hopefully, once it touches around 18,000. So clearly, I think the movement in the index would now be a little narrow, and the focus would now be on more of stock specific kind of movements, considering that now the earnings season is just going to begin with TCS declaring the numbers today.
Absolutely. You pointed out, right? And that's what our focus on this show is also, to be understanding what kind of expectations can we have from these big bellwether companies from the IT pack as far as the earnings are concerned. Now, TCS will come out with the numbers today itself. Now, it's generally a weak quarter for the IT sector. But how telling an impact do you really see on the sector as a whole before we come to the specifics of each of these companies? Because of the global slowdown, for one, a cut in the IT spends in general, and this would have been further beaten down sector as well, and also the banking crisis that would have an impact. So how do you think it's going to really pan out for the sector as a whole?
No, I think you rightly mentioned that the fourth quarter is a seasonally weak quarter. But what is important is that what kind of growth commentary, what kind of margin outlook the company shares after the Q4 numbers, because I think a lot would depend on what kind of margin guidance the company gives out after the FY24 numbers, 23 numbers are out. Most importantly, as you rightly pointed out, BFSI accounts for almost 40% of the overall IT services demand. And with the US banking sector going through a major crisis, it's very difficult to pinpoint as to what would be the impact on the tech spends in the coming year. Normally IT budgets or the tech kind of spending is outlined in the first 2 to 3 months of the calendar year. So I think this would be a number to watch out for. What kind of numbers the company delivers in terms of the new client additions, what kind of existing contracts happen, whether there would be any cutbacks in technology spending. Now these are all issues which the markets would like to keenly assess banking clients. Most importantly, what's the kind of tech spending which is going to happen in 2024, that is for the current financial year. And most importantly, are they confident of maintaining their margin trajectory? I think the margin trajectory in any way, if it shows a negative picture or some sort of a cautious outlook, that would definitely not comfort the market. So I think one is the margin guidance, and secondly, the kind of growth commentary from the BFSI space, because that is one area where I think things are looking pretty challenging, at least for the next 2 to 3 quarters.
Right. And also between the two bellwether majors, now TCS and Infosys, where does your conviction really lie? And what, according to you, is a deserving PE multiple for both TCS and Infosys at this point?
No, I think my guess is that both the TCS and Infosys come in the same kind of growth trajectory. I would believe that TCS obviously seems a little better positioned, considering the fact that it's a much larger player. Most importantly, it's got a larger clientele base. So I think TCS definitely has the ability to shoulder any short-term kind of shocks. But on the other hand, Infosys has also done a great job in ensuring that digital is now a large part of its business model. Plus, in case of Infosys, I think the market should obviously look at what kind of dollar guidance they indicate in the coming financial year, and obviously the margin guidance. Unlike Infosys, TCS does not give any guidance number. So I think we need to understand only the commentary from the management and then take a call.
Right. Now, when you talk about the performance of the IT index, now this index has actually done better than the Nifty in the fourth quarter. What do you think are the reasons for this, and can it continue to outperform then?
Yeah, I think the biggest plus point for the IT sector, and as you rightly pointed out, in the fourth quarter, the IT index relatively outperformed the broader Nifty index, is because most of these companies have been beaten down from their 52-week highs. Most of these companies are debt free, they're cash rich, and they operate on a very asset light model. So obviously, once the recovery and the tailwinds in US and Europe improve, then I think the recovery also will be equally fast. So I think a lot of hope is spent around the fact that maybe after the June or July or maybe the August quarter of this year, we could see some sort of normalcy coming back again. The headwinds which are there in US and Europe would obviously subside by that time. And I think once the US economy gets a little more healthy, you could see a lot of technology spending coming in from there. But I think all depends on the kind of macros, which these both these client countries generate, and only then one can get a sense of a kind of a better visibility about growth for the Indian company. So I think till that time you're going to see some sort of value buying coming in, but a clear visibility on earnings would obviously re-rate these companies. Till that time, I think they are going to remain in a very close range. Investors who want to take a contract call and invest in these companies should realize that they could possibly have to wait for a slightly longer period if they want to make a alpha from these stocks, because these are all well researched stocks and there's nothing hidden about them.
Right. Also, like, would it be
Visibility and the improvement will improve.
right? Now, would you call it fair to say that perhaps the worst is at least behind us as far as the performance of these IT stocks is concerned? And also now, when you talk about that, the kind of contra call that if investors will have to take, they'll have to wait and watch out for clear signals emerging. But in case for that as well, where would you be really convinced about? Would it be the large caps like TCS, Infosys, Wipro and HCL Tech, or would it be the other mid-cap IT firms which have relatively outperformed as well? The likes of, say, a Tata Elixir or KPIT Tech, which have also emerged as consensus buys over the last point in time, but the kind of run-up that we've already seen in them.
First of all, as of now, most of the negatives are built into the price. But in case we have another, crisis like what we had in the US banking crisis some weeks back, until that time, I think things look a little better now as far as the US banking crisis is concerned. So I think, obviously a contra buy would obviously help the investor to make a better alpha. our sense is that TCS and a stock like KPIT would definitely emerge as strong contenders. Once a re-rating in the sector happens. So I think one has to be very cautious in selecting your stocks. But KPIT and TCS, these are very two strong candidates which I think can get re-rated over the next 1 to 2 years. But I think you need to have a lot of patience and conviction to hold on to these stocks because the recovery also will be equally slow.
Right. Let's now move on from the IT pack and the earnings expectations there, and let's focus on news that's emerging from across the globe as well. According to Wells Fargo now, the resilience of US stocks this year will be short-lived because of the escalating economic situation that would probably cause the market to decline in the months to come. According to the bank, the S&P 500 will now have a 10% correction during the next 3 to 6 months, and the benchmark for US stocks would have then reached a level close to the November lows of 3,700, and the S&P 500 is up roughly about 7% this year, driven by the drop in treasury yields and a perceived pivot by the Federal Reserve on the interest rates as well. But the recent rally has started to lose steam as investors await a murky earnings season and concerns around the financial systems linger as well. Now, apart from this, we also have the International Monetary Fund that has now cut India's GDP growth forecast for the financial year 24 by 20 basis points to 5.9%. Now, the latest forecast is also lower than that of RBI's projection of 6.4%. The IMF really expects that India's retail inflation is going to be 4.9% in FY24 and then 4.4% in FY25. In its World Economic Outlook report, the IMF has also lowered the forecast for India for 24-25 fiscal year as well to 6.3% from earlier projections of 6.8% as well. How do you really look at this gamut of news flows that are coming from across the globe as well with respect to the global markets performance and on the growth slowdown concerns as well? And could it be a major worry for the Indian markets going forward?
Yeah, I think Sakshi, my sense is that if this year we have a normal monsoon, hopefully where the Met Department has recently said that despite the El Nino factor, we could be having a normal monsoon. So I think this is going to be a key trigger point for the Indian economy because I think all domestic focused industries as well as rural based industries would definitely do well if there is a normal monsoon because that would actually generate a lot of demand. And my sense is that companies which are into the export market and which obviously have a large export exposure would obviously underperform. So I think, as far as the domestic sectors are concerned, especially if we talk about the automobile sector, the auto component sector, capital goods, real estate, cement, I think we have been hearing on ground that there's a lot of demand, in fact, latent demand, which is yet to pick up. So my sense is that despite concerns on the macroeconomy front, specific sectors would continue to do well, which are largely domestic focused. On the export side, we could see a little bit of underperformance because if Europe and US do not recover, then I think it's quite obvious that even Indian companies who cater to these customers are bound to suffer in terms of volumes and obviously in terms of profitability margin. So I think one has to take a broader perspective of focusing on the domestic focused sectors. I think that would be a better strategy in the current scenario.
All right. Well, thank you so much, Avinnash, for being with us on the show and discussing with us all these insights about the earnings expectations from the IT pack and overall global market momentum and the kind of factors that will impact the market trajectory going forward. Many thanks for being with us. The market's continuing with its momentum on the upside, although just about 100 points up now for the Sensex, 60,266 currently for the the level of the Sensex. That's up about 0.2% odd. Talk about the Nifty, that's inching higher. In fact, 0.3% higher for that one, 54% higher, 54 points higher, and 17,776. That's the level at which the Nifty 50 is moving at. We'll have to keep an eye out on the kind of movement that we see on the markets and the supporting factors as well, as this could well be the 8th consecutive day when we will see the markets inch up in the green. So to track all of those momentum, you should be with us on Business Today TV. Don't forget to subscribe to this platform and also continue to engage with us on our other social media channels as well on Facebook, Twitter, LinkedIn, and Instagram. Until then, many thanks for tuning in.
There is widespread reporting in the Western press